do some trading now. Scott Bauer standing by, CEO of Prosper Trading Academy. Scott, what do you think? 2% ahead of the earnings on the day of the report. This is a big jump here.
Nice push, and I wish that it wasn't, honestly, because I think this stock is going to get out to all-time highs, whether it's right after the print or maybe just in a week or two, Oliver. Depending on what this guidance is, I think Apple's a stock here on any pullback, on any sort of, if there's any disappointment, you got to be a buyer. I think this thing breaks out to all-time highs.
Oh.
So, yes, I really do. And is there going to be drama, like you said? Yeah, there's going to be drama. This report is going to be, scrutinized every which way that you can believe. But again, on any pullback, on any sort of disappointment, you got to buy this. And I think, if you look at NOW, what happened with ServiceNow yesterday, I think we may see something very similar with Apple. The numbers were phenomenal. They came out with guidance, which was decent guidance, but maybe not as good as what the analysts had expected. So the stock got hammered overnight, and now it's up huge. I think we may see the same thing with Apple today. So I'm playing this to the upside. I'm using November regular expiration options, November 19th, and I'm creating what I call a broken wing butterfly. Now, a butterfly signal or butterfly position is when you have a long option, short two options, and then another long option on the end. And typically in a regular butterfly, the width, the distance between the strikes are symmetrical. They're the same. In this instance here, this is decidedly bullish.
Okay.
Because I'm buying the 152.5 strike, selling two of the 160s, but then buying the 162.5. So I'm still doing the 1 to 2 to 1 ratio. But if you break this down, what I really have is a long $7.50 wide call spread, and then a short $2.50 wide call spread to basically finance the purchase of the long side of the spread. So it's still a butterfly, but it is decidedly skewed to the upside here.
Okay, and there's a specific apex of this trade. You're making money above 154. You do get capped out, but you've got a pretty interesting profit and loss diagram that gets built out here because of that, the third strike that you've got in there, the third contract. So you get a little bounce if you hit it just right.
Right, and hitting it just right is always going to the short strike. So optimally, 160 is my target. That's why I'm using that as my pivot, as my short strike. So this thing could be worth as much as $7.50. If Apple completely flies past all the strikes here, it'll be worth $5 at expiration. And I'm going to pay about $1.65 for this. That's my investment. That's all I lose in this if I'm wrong, if Apple doesn't go up. But the key is I'm buying myself some time because I have a feeling here that the street may not love the guidance initially, but I think, in the next couple weeks, we're at those all-time highs.
They'll warm up to it. Okay, 154 and change for the break even. Looking for a bounce in Apple. Scott, thank you. CEO, Prosper Trading Academy. Good
Thanks,
stuff.
Oliver.
Getting ready for the number.